Hey everyone, welcome back to Corporate Dakota, the place where we unravel the financial mysteries of the corporate world with a smirk. Because let's be honest, sometimes these filings read like bedtime stories unless you know where to look. Today we are diving into Bank of Marin Bancorp's latest report, and folks, it seems like they've got a few things cooking that are worth talking about, including a dividend and some tweaked insider rules. Stick around as we decode what this all means for you. If you love getting the real story behind company announcements and want more deep dives like this, make sure you're subscribed and join our growing community on Discord. The link is in the description below. Alright, let's get straight to the juicy stuff. This report is dated July 28th, but some of the key events we're unpacking happened on July 24th. Now, you might be thinking, why the delay in reporting? Well, sometimes it takes a beat to get everything officially filed and out there. What's really interesting here is that Bank of Marin Bancorp, which you probably know best by its stock ticker BMRC, and is the parent company of Bank of Marin, is giving us insights into their second quarter results for 2025. They also dropped some other important news on that July 24th date. So on that specific day, July 24th, there were a couple of significant decisions made by the board of directors. Think of it as a closed door meeting where the big moves happen. First up, let's touch on their financial performance. The report mentions financial results for the quarter ending June 30, 2025, which were actually released a few days later on July 28th. They often do this, releasing the big financial news and then filing the official paperwork. We're talking about earnings and how the company is doing financially. While this report doesn't dive deep into the numbers themselves here, it points us to two crucial documents, a press release and an earnings presentation. This press release, Exhibit 99.1, as it's called in the filing, is where you'd find the nitty-gritty on their financial results for the second quarter of 2025. Now, I can't read you the whole thing, but typically these releases highlight key figures like revenue, profit, earnings per share, and how these stack up against previous periods or expectations. It's the company's official story of their recent financial performance. You can also expect a related earnings presentation, Exhibit 99.2, which usually offers slides with charts and graphs to make those numbers easier to digest. They've made these available on the company's website, which is a common practice. But here's where it gets really interesting for us as investors and observers. Beyond the standard financial report, the board also made some other significant decisions on July 24th. First, they approved a quarterly cash dividend. What does that mean? It means the company is sharing its profits directly with its shareholders. The dividend amount is 25 cents per share. This is good news if you're a shareholder, as it's a direct return on your investment. This dividend is scheduled to be paid out on August 14th to shareholders who are on record by August 7th. So mark those dates if you're holding BMRC stock. It's a sign of financial health and confidence from the company's leadership. Now, this next part is crucial for anyone involved with the company, especially employees and directors. They've revised their insider trading policy. Insider trading is basically when people with special non-public information about a company buy or sell its stock. To prevent misuse of this information, companies have these policies. Bank of Marin Bancorp reviewed their policy and made some changes after consulting with their lawyers. One of the key changes is about the blackout period. This is a time when insiders like executives and board members are restricted from trading the company's stock. Traditionally, this period started 3 weeks before the end of the financial quarter. Now it's been shortened to begin just 2 weeks before the quarter ends. Why the change? It could be to allow for more flexibility or maybe to align with industry standards. It means a slightly longer window for insiders to trade before the quiet period kicks in. Another significant revision concerns what are called 10b5-1 trading plans. These are prearranged plans that allow company insiders to buy or sell company stock at a future date. They are a way to trade stock legally, even when you might have inside information, as long as the plan is set up in advance. The new policy requires that any such plans set up by Bancorp employees or directors must be pre-approved by the company itself. Plus, these plans have to strictly follow the rules set by the Securities and Exchange Commission. This is a really important move to ensure compliance and prevent any appearance of impropriety. It adds a layer of oversight to how insiders manage their stock transactions. Speaking of stock, we know that Bank of Marin Bancorp's common stock is traded under the ticker BMRC on the Nasdaq stock market. This is the standard way publicly traded companies list their shares for everyone to buy and sell. The filing also has a checkbox asking if the registrant is an emerging growth company. This is a designation for companies with relatively low public float and revenue, allowing them some regulatory flexibility. Based on the tick box not seeing checked here, it looks like Bank of Marin Bancorp does not consider itself an emerging growth company for the purposes of this filing. This means they are likely subject to the full reporting requirements without the extended transition periods for new accounting standards. So to recap the filing itself, we've got the standard information about the registrant, their filing number, address, and stock exchange listing. The core of this report focuses on two main items revealed through the attachments. Exhibit 99.2 is the corresponding earnings presentation, typically a visual aid for those numbers. If we were to dive into that earnings presentation, typically found in Exhibit 99.2, we'd expect to see things like profit margins, interest income versus expenses, loan growth, deposit levels, and perhaps comparisons to analyst expectations. These are the numbers that truly tell the story of the bank's operational health. For instance, we'd want to see if their net interest income, which is the difference between what they earn on loans and what they pay on deposits, is growing. We'd also look at their efficiency ratio, basically how much it costs them to generate $1 of revenue, and deposit growth, which is the lifeblood of any bank. Let's look at how these numbers might translate into the real world. If the bank's revenue for the quarter, which we'd find in that press release, showed a significant jump, it could mean they've been successful in attracting new customers or increasing the volume of their lending. On the flip side, if we saw a drop in net income despite potentially higher revenue, it could indicate rising costs or increased provisions for potential loan losses, which might signal caution about the economic environment or specific segments of their loan portfolio. The dividend announcement of 25 cents per share, while not huge in itself, is a consistent signal. If they've been paying this dividend regularly, it shows a commitment to return and val the economic environment or specific segments of their loan portfolio. The dividend announcement of 25 cents per share, while not huge in itself, is a consistent signal. If they've been paying this dividend regularly, it shows a commitment to returning value to shareholders, a sign of stability and good cash flow management. However, if this dividend was newly introduced or significantly increased, it would signal a strong boost in confidence from management about. On a strategic level, the revision to the insider trading policy, particularly the shortened blackout period and the new rules for 10b5-1 plans, suggests a proactive approach to corporate governance. Bringing insider plans under tighter approval and ensuring compliance with SEC rules helps build trust with investors. It minimizes the perception of insiders trading on privileged information and reinforces that everyone is playing by the same clear rules. This is especially important in the financial industry where trust and transparency are paramount. The goal here is to prevent any appearance of unfair trading practices, ensuring the market perceives the company as ethical and well managed. Scroll, looking at it from a broader perspective, Bank of Marin Bancorp operates in a competitive banking landscape. Their financial performance reflected in those upcoming earnings will be directly compared to their peers. If their loan growth is outpacing the industry, or if their deposit gathering is particularly strong, it suggests they are gaining market share. Conversely, if they are lagging, it might indicate challenges in their business development or that competitors are offering more attractive products or rates. The dividend is a signal of maturity and profitability, but it's the underlying performance that truly matters. Scroll key conclusion. Bank of Marin Bancorp's July 2025 filing points to a company that is not only releasing its quarterly financial results, but also taking steps to refine its internal governance. The dividend declaration is a positive signal for shareholders, indicating consistent profitability and a commitment to returning capital. The overhaul of the insider trading policy, especially the new rules for 10b5-1 plans, demonstrates a focus on compliance and transparency, which is always a good sign. These moves collectively suggest a management team that is mindful of both financial performance and the perception of its operations by the market and regulators. Scroll, so what's my take on this? Bank of Marin Bancorp seems to be managing its business with a steady hand, balancing profitability with prudent governance. The dividend is a reliable return for shareholders, and the tighter insider trading rules should enhance investor confidence. The real test, as always, will be in the details of their actual financial performance for the second quarter of 2025. We'll need to see if their revenue growth is solid, if their costs are under control, and if their loan portfolio remains healthy. The key risk for any bank is always economic downturns impacting loan quality and the competitive pressure to maintain market share. However, their proactive approach to policy suggests they are aware of these challenges and are working to mitigate them. Alright, that's our decode of Bank of Marin Bancorp's latest filing. What's your take on these updates and what they signal for the company's future? Do the dividend and policy changes make you feel more confident about BMRC? Drop your thoughts and any questions in the comments below. If this breakdown was helpful, please hit that like button and subscribe for more in-depth corporate analyses. And don't forget to join our Discord community using the link in the description for even more insights and discussion. Thanks for watching, and I'll see you in the next decode.